It's a volatile market, and you know this. But what you may not know is that revolutionary new research tools and sentiment indicators can help you navigate it. What stocks are investors most bullish on? What asset classes are they piling into or avoiding? What early tip-offs can social sentiment give you about market direction, and what is sentiment saying about where we go next? Joining me for this week's MoneyShow MoneyMasters Podcast is a man with the answers. He's Tom Bruni, Editor-in-Chief and VP of Community at Stocktwits, the company behind the Cashtag and the upcoming Cashtag Awards event in New York. Thanks for joining me, Tom. So Tom, here's a shocking and surprising headline I'm going to start this conversation out with, and that's markets are volatile. No surprise there. What are your thoughts on this environment and what's going on out there here early in 25?
Yeah, I mean, what drives volatility is uncertainty, and I don't think we've ever had more of an uncertain environment than we're in right now. Really, what drives, stock prices over the long term is fundamentals, right? And if you have a seismic shift in the way that geopolitical trade is going to happen, it's really hard to model that. And so I think we're seeing analysts, we're seeing business leaders, we're seeing investors trying to figure out what the next 6, 12, 18 months is going to look like for a lot of the individual companies that they cover. And they're not getting a whole lot of answers. I mean, we had Delta come out basically saying like, we'll reaffirm our guidance, but we're not going to make any changes to it. Walmart had some warnings about their operating guidance. They were like, we just don't know on the cost side. So we're going to see a lot of that this quarter. And, earnings season is starting to ramp up this week. So, expect a lot of just we're not sures from management.
It's kind of funny that you mentioned that because, I know some people I've talked to that say, okay, you get the political stuff, geopolitical stuff, but then at least when you get to earnings, it gives you some financial numbers to look at it and figure out valuations and trends and so on. But that's really not the case this season, right?
Yeah. And I think what I'm seeing a lot of is people looking at forward PE charts and saying, wow, we've had a 20% sell-off. In many cases for individual stocks, we've seen much larger drawdowns. And people are saying, hey, Amazon's trading at its lowest forward PE in the last 10 years. Maybe it's an opportunity to get in on the dip. And, my rebuttal to that is, well, if you don't know what the E is, or that E is going to be revised significantly over the next, 3-6 months, like it's really difficult to make a decision. And so I think it's a trader's environment right now. Anytime the VIX gets above, 30, this is an opportunity for those active traders like we see on Stocktwits to focus on individual stocks. Typically, they're reducing their position size, trade a bit smaller, pick their levels, pick their spots, stay in trades shorter periods of time, and just be a lot more tactical. And then I think at the index level, it's really interesting. We're seeing inflows to all of the major ETFs like VOO, QQQ. Like retail continues to buy the dip across the board, and so I think until that buy the dip mentality is broken, we're going to continue to see index level kind of accumulation.
Got it. In your role, following community there at Stocktwits, I mean, that's a great observation. I'm curious, what else are you seeing? I mean, what tickers, what trends are people talking most about, and what are they maybe pretty bullish on and pretty bearish on at this point?
Yeah, so one that surprises me is we've seen pretty good outperformance in gold recently. I've seen a chart from 2000 to now. Gold is up 1,000%. The S&P is up 500%. Obviously, time frame comes into play there, but despite the huge rally we've seen in gold over the last 18 months, there's not a lot of fanfare around it. I mean, we just had Goldman basically upgrade their price target for next year for gold to, I think, 4,500. So they still see another 40-ish% upside from current levels. We ran a poll over the weekend on our site, and we had about 2,000 respondents. I basically asked, how are you playing gold's rally? And I said, gold miners, GLD, junior gold miners, or no, I'm not playing the gold rally at all. And 60% of people said they're not playing the gold rally at all. So despite the uncertainty, despite the kind of hedge that gold has been over the last 6, 12, 18 months, we're still not seeing a lot of participation on the retail side, from my perspective at least. And then from an individual stock perspective, people are wondering about the Mag 7. Like, do I buy the dip in NVIDIA? It's gone nowhere for the last year. I think it's down 40-ish% off its highs. So like, if you still believe in the AI revolution that's happening, or the quantum computing revolution. People are trying to figure out which stocks individually will not be impacted as much, or that they could buy for the long term. But again, I think a lot of people are approaching it from the technical perspective right now, just because the fundamental side, we really have a lot of kind of uncertainty around what the business environment's going to look like for at least the
Yeah.
rest of the year.
Got it. You brought up the technical take. I know you were at the Chartered Market Technicians event recently in New York there. What were you hearing on site there? The conversations you had, the presentations. I mean, what are people kind of talking about when it comes to market technicals here?
Yeah, it was very interesting. The kind of conversation was around how I don't want to say orderly the sell-off has been. Like we're seeing the kind of panic in terms of the numbers, in terms of selling volume, put buying, other kind of like washout measures, stocks below their 50 or 200-day moving average. So a lot of the key technical indicators are hitting washout levels. But then as you're talking to professionals, the consensus I got is people are not necessarily scared, but they've shifted their mindset after 2 great years from 23 and 24 from, hey, we want to make as much money as possible to now we got to preserve our capital. Like
Yeah.
they're worried about where do I put my money? Like if you're a long only manager and you have to stay invested, you can't just go to cash. That's why we're seeing defensive stocks catch a bid. We're seeing, things that you can kind of stuff money away in that are a little less volatile than the market and can provide some of that safety. So there's a defensive nature, and honestly, I think that's appropriate given the environment. But a lot of people playing defense, and I think it creates an interesting setup because if we do get an upside surprise in the economy or tariffs or whatever, I don't think a lot of people are looking to buy that. I think they're actually looking to use that to raise cash or, swap out their higher beta positions for lower beta stuff. So people are defensively positioned and I think if we do get a serious upside surprise, a lot of people will be skeptical and probably not buy that move. I mean, we're already off, 10% off our lows from last
Yeah.
week. So I think from what I'm seeing and what I'm hearing from both professionals and retail, people are trading around it, but they're not necessarily buying that this is the bottom. It's a bottom, but it's not necessarily the bottom.
Got it. And when it comes to sort of like quantitatively looking at your in-house data and what you guys have, what is it showing? I mean, people can say, oh, the AAII numbers are doing this. That series goes back to the 80s. Obviously, what you've
Yeah.
been doing is a little newer. So what are you seeing from that standpoint?
Yeah, so we've got a really good chart. It's called the Stocktwits Sentiment Index. Basically, we look at all of the engagements on our platform around either bullish or bearish messages, and we compare that to the CBO Volatility Index. And generally, they move together like over long enough time frames. But because Stocktwits investors are focused on individual stocks as opposed to the indexes, there tends to be a bit of a leading indicator in our data because as we know as technicians, right? Before the market tops or it bottoms, we see a lot of individual stocks topping and bottoming first.
Sure.
And so because our community is trading those individual stocks, they get that early signal that, hey, my portfolio of 10, 15 high growth stocks is starting to roll over, but the indexes are fine. And so we actually got an interesting signal earlier this year in like January, mid-January, late January. We started to see our our Stocktwits sentiment index start to rise a bit ahead of the volatility index. And my theory is that's because we saw a lot of the individual stocks people were trading, start to lose some momentum. And so recently, I just updated the data today. It just hit a new high. So like people are still seeing, people are still seeing a lot of carnage in the individual stocks that they're trading. And so that to me signals that we may have not seen the end of this, decline just yet.
Okay. Just to pivot, I mean, you talked about gold as one of these alternative kind of asset categories. I want to bring up crypto and what you're seeing there. I know a lot of the work you guys do follows in that space as well. Any trends
Yeah.
that you think are important for people to know about that are listening to this?
Yeah, there's been a lot of I don't want to say carnage, but especially in the altcoins, they're well off their highs from, 4 or 5 months ago. So I think there's opportunity for, one big trend on our platform is the outperformance of Solana versus Ethereum. So I don't understand the technology behind it or all that, but from what I understand, they're somewhat comparable platforms, and people are starting to point out that Solana is performing much better relative to Ethereum, which at its peak was, I don't know, 4 or 5,000 a coin. It's down around 1,500. It's underperformed for a long time, and so people are really relying on Solana instead as kind of that alternative exposure. And then from a Bitcoin perspective, I think we ran a poll over the weekend and we're asking people, given all the news, what's coming out, are you bullish, bearish, neutral? And I think a big consensus that came out of that is that we're stuck in this kind of big trading range between 72,000 to 108,000. And there's a lack of a clear catalyst right now for prices to move either higher or lower. I think a lot of people, and I think we talked about this at the Money Show, couple months ago, like a lot of people were looking for the Trump administration's kind of deregulation to be that next leg higher in crypto.
Yeah.
And we never got there. So right now, when liquidity is high, when people need things that they can trade 24/7, I kind of view Bitcoin as another risk asset and source of liquidity. You see it over the weekend, right? If tariff news comes out, you can't sell your stocks. What do? You sell some Bitcoin, and then when futures open, you kind of rebalance the position. So I think Bitcoin's in a tough place right now because it is, being used as a trading asset and a trading vehicle. But I think ultimately, there's still a lot of positivity and optimism about the long-term trajectory of crypto and Bitcoin in general.
Yeah. Well, Tom, I want to talk about the upcoming Stocktwits Cashtag Awards. Here at Money Show, we're excited to partner with you guys on that. I'm looking forward to meeting you guys in New York in April. What is this event going to be about? What are people going to, get to experience there? I guess April 30th, right?
Yeah, it's great. April 30th, it's a Wednesday in New York City. Great opportunity to get together and celebrate the biggest names in social finance. So, different creators, different analysts, the people you're seeing on TV every day. We're bringing everyone together. We've got, I think, 14 categories ranging from best content creator to best new ETF to, best retail brokerage. So we're celebrating the world of social finance and kind of the democratization of all of the information and access that we've been given over the last decade. And yeah, it's just a good opportunity to get together. So we're looking forward to hosting you and a lot of other folks to come together and I guess in this environment commiserate about what's happening in the market. So good networking opportunity and good chance to kind of connect with some of the people you know and love online and meet them in person.
Yeah. Well, I'll tell you, the way this market's trading, we could all be euphoric by April 30th, versus
Exactly,
despondent
yeah.
in mid or late February, right?
I've got my fingers crossed, We'll be cheersing to some positivity as opposed to negativity. But either way, we're excited to have people there, and it's a good opportunity. Again, like Money Show, Stocktwits, we're all about community. We're all about connecting people. We're all in the markets for one thing. We're here to make money. We're here to have this lifelong journey together. And so this is a great opportunity to meet new folks and kind of connect and advance your journey in the markets. So.
Oh, awesome. Look, Tom, I really appreciate you taking some time out here, share some market insights. Viewers, if you're watching this, again, we are partnering with Stocktwits here at Money Show. I'm going to be joining Tom, and the roster of people they have coming together in the financial content world is pretty extraordinary. You're going to get a lot out of it. It's going to be Wednesday, April 30th at the Stand in the Union Square, correct?
Yep, that's correct. 6 to 9 p.m.
Perfect. All right, check out the details in the description here below if you want to join us. And Tom, thanks again for your time.
Thanks, Mike. Great to be here.